Hello traders, Jason here with SwingHigh.com. It is Friday, February 12th, 2010, and this is your post-market analysis. We had an interesting day in the markets today, a gap down of about 1% and then a recovery across the board. Ultimately, the SPY finished up fractionally, the Dow finished down fractionally, the NASDAQ finished up almost 0.4%, the financials finished up fractionally. The Russell's up over a full percent, which is a big move there. Definitely some relative strength. The dollar finished up and gold was about flat. So here is the intraday analysis of SPY 5-minute chart. As you can see, this is yesterday's close up here at 108.11. We gapped down hard today, down to 107, almost on the penny. Put in a bottoming tail reversal here. Came up, chopped higher, tested some resistance here at 107.20. It continues to prove to be resistance. Put in an ascending triangle formation throughout much of the morning, and then pretty much right after noon broke out of that ascending triangle to the upside. Came up and immediately tested the 108 mark. Turned around, came back, found support at 107.20. And then just tested 108 again, put in a higher swing low here, and then came back to finish testing 108 for a third time today. So it's nice to see our support and resistance levels acting as such and doing a very good job, and it's good to see that, definitely. On the daily chart, we do have a weak breakout. Well, we have this rising wedge for the past almost year now. Broke down and put in a bull flag. And now we have a weak breakout of this bull flag. And it's very weak because we have two equal bars pretty much. The volume was kind of light. And if anything, this could be just a continuation of a low base formation here. It's not showing too much desire to go up or down either. I do kind of expect a continuation or a low base and then maybe another breakdown on the daily chart. If we do continue up, expect resistance at 109 for sure, and 110, or 110, excuse me. I don't see us getting much higher than 110. Definitely, it's going to be very difficult and a while from now before we can break above 111 and 112 again. If we do turn around to the downside, we have a big space here where there's not much support until 105. And then after that, it's 103.70 and 102. So right now, it's tough to call. We could go in either direction. But I'm willing to bet more downside in the future here. Did expect a small pop here, got a very, very small pop, just about 2 points. So we'll see if we put in a swing high here. It's tough to call today with an inside trading day like this, meaning we stayed within yesterday's price range. So the market's not showing any conviction in either direction. Let's take a look at the internals. The trend was very bearish today. Over 1.2 is a healthy bearish reading on the trend. More volume was flowing into stocks on the decline than on the rise. However, the trend Q, which follows the NASDAQ, was relatively bullish today, spending most of the day chopping around 0.8. The tick sort of seesawed and followed the market action pretty well. So it was good confirmation there. And similar story with the tick Q. The VIX, which adds reason for this to be considered a weak breakout. The VIX dropped almost 5%, down about 4% on the day, and after hours almost to 5%. So a drop in the VIX, actually, I stand corrected. A drop in the VIX is way more confirmation than necessary. So we should have been up higher today with this drop in the VIX. Thanks for being a part of SwingHigh.com. I'll talk to you tomorrow or next week.